Hey, I'm just here with Emmanuel from AH Jackson, and we are just going to go through some case studies on how you've been able to save some clients money doing property deals. I know we're talking specifically about property development, and I'll let you explain the details. So do you just want to just introduce yourself really quick, Emmanuel, and tell us about how you've saved a huge amount of money doing a few different things with clients?
I'm Emmanuel from AH Jackson & Co. I've been a partner since July 2004. I've only ever worked at AH Jackson & Co. for my whole career, so I think I'm coming up to 25 years this year. So we're a sort of a small to medium boutique kind of firm. We're three partners. We do tax and business services, along with business valuations, auditing, due diligence, self-managed superannuation, administration, and
so I know when we first met, we were talking about different structures, tax structures, and how we can optimize tax for myself, being that you're my personal accountant. So I know that you've been able to do it with other people as well, and why part of the reason why I'm still with you 3 or 4 years later is that you're very good at what you do. So just give us an idea on a couple of different ways you've been able to, like some case studies on how you've been able to save people a huge amount of money in tax by doing what it is you do, working the magic.
All right, I can do that. One's pretty simple, really. The client came to me initially, and their structure isn't really in an optimal way what I would consider. So they've obviously rushed out, set up a company, put themselves as an individual shareholder, bought a block of dirt, and suddenly we're going to be a developer. So when I looked at the structure, I said, well, it's lovely, you'll get the company tax rate, which at the time was probably 30%, but now it's down to 25%. I said, the problem is when you want to pay dividends out and utilize the money, it's only one individual person at the time that is going to get the dividend, which means any dividends that come out will add to their already existing income, and they will pay the prevailing marginal tax rate, which, if it's was going to be a successful property development, then it would push them well up into the 7% tax bracket plus Medicare. So we said, righto, how do we try and alleviate and give some relief, because you can split income if dividends go to a trust, and you can have a discretionary trust that splits amongst family members and other entities. So I said, right, well, we can move the shares from an individual to a trust. But there's a couple of things that we needed to consider quite immediately. One is a stamp duty issue, and the other is any capital gains tax on the transfer of the shares. Because even though it's transferring from yourself to your own trust, it's still a CGT event.
So just a question. So he'd already set the structure up.
Yep.
Gone and bought the property to do the development. Yep. And then came to you after
the fact. Yeah.
And you had a holy crap moment.
We did.
Holy crap, what have you done?
We did. So it wasn't too far along either the path of the development where the value would substantially increase. So I said, look, we've got to act pretty quickly if we're going to do it, because if it's not considered a landholder for stamp duty purposes, which means the value of the property unencumbered under 2 mil, well, then you can move shares without any stamp duty here in Queensland. So we made sure that was the case, and we could do that. And then by the same time, the value of the property hadn't increased by much, if at all. So the CGT that would have been payable is quite negligible. So
CGT,
capital gains tax. Yeah. So the end result is we got a more flexible structure going forward to be able to distribute profits once the development approvals and it was completed, and therefore we could pay dividends to the discretionary trust, and the trustee could then decide who was going to be beneficially entitled to the dividend income after that. So instead of copying it all in his individual rates at 47%, sometimes we're able to lower it down a little bit, which is a saving. You know, any saving's a good saving. But the big thing also was there was no stamp duty along the way as well. So that's just one that you've got to see and act quickly, because if you'd already started and put the building approvals, etc., suddenly the value of these things can go beyond the 2 mil, and we've suddenly got problems, and it's a bit more difficult to do.
Yes. So what ended up with the development? As in, what did he end up doing? What was the development? How much did he end up making? And then really, how much did he end up saving in tax by putting it into a separate structure?
Look, at the end of the day, he still has the profit. So he made quite a substantial profit sitting in the company. And he's slowly utilising it down to his adult children now as they go through uni and things like that as well.
Oh, wow.
So it gives you that flexibility to be able to actually use the really low tax brackets for extended family members as well. Okay, and the other point is also that from an asset protection point of view, if the development's done, you can push all the profits down and get it to a passive other company, and there not be, you know, you've got the profits away from the risk entity which did the development potentially once it's all sold, and move it to a passive investment company as well. There is some complications with moving the money across to the new company, but from a protection point of view, it works pretty well as well. So this is an ongoing kind of saving for a long time. So it lowers his tax rate from 47, I think, down to he's got 32.5, a majority of it. So, you know, on $1 million profit, there's a substantial saving.
15%, 150 grand ish.
It's not bad.
Yeah.
It's better to be in your pocket than
150 grand. That's a brand new, very expensive car, deposit on another property.
Correct. Yeah. More importantly, Adam.
Yeah. I mean, the deposit on the other property is probably the bigger one, or
correct, and
potentially being able to do a whole nother development that can then generate another $1 million.
Correct. Yep. Yep.
Keeping the cash rolling.
Yep.
So, okay, so that's one scenario, changing stuff out, or changing out an individual shareholder to more of a corporate structure. Yep. And that probably cost him, what, $2,000 at the time to do that?
Not a great deal of money. No, a trust, I was, like $1,500.
$1,500 saves 150 grand. That's a pretty good investment.
So a little bit of advice from us. I didn't think we charged him, to be honest. So it was so simple that it's like we set up the new entity and away you go, and that to me makes sense. So it was the right thing to do.
Yes, yeah. I know we've done that with a couple of mine as well. Yeah. Changed out some individual shareholders where we can.
Yep, definitely. You can take the opportunity when you can, but you've got to act quickly before you get too far along, because you don't want the value. Because obviously the value of your development land goes up the more the more you leave it. So it's just how it is.
Yes, yeah, gotcha.
It comes back to making sure you get advice. You've got a connection with your accountant and lawyers and things like that. They're all working in unison together along with you, because it is good money spent, okay, because it can avoid a lot of problems. I can guarantee you that.
Yes. Preaching to the converted.
Thanks.
All right, thanks so much for your time, Emmanuel. I really
That's all right, no problems.
And if anyone has or wants to look at changing over their accountants, or if they want to, ask their current accountant for case studies and they're not happy with them, you're Brisbane-based?
Brisbane-based, yep.
But you have clients all around Australia?
Pretty much, yeah. We have clients.
And around the world, I know you said you've got some guys overseas.
We have, some that have got subsidiaries here as well. So, look, and our clients sometimes expand, but look, we'll help out where we can. And if we can't, I'll tell you pretty much at the end of the day as well. But again, it's just taking the time to try to understand how to best move and make a solution for a problem. That's what I like to do.
Awesome. Thank you for sharing the information. Really appreciate it.
Take care.